Imagine standing directly on the fault line of a massive financial earthquake, yet everyone around you is complaining about the weather. That is exactly what is happening today in the cryptocurrency markets. Welcome back to the channel. We are broadcasting an emergency market update because the title of this broadcast, Ripple just triggered a massive XRP reaction, is not clickbait. It is a mathematical understatement. Over the past 72 hours, the Ripple ecosystem has initiated a sequence of events so profound that the structural foundation of the digital asset space is literally shaking. But if you look at the retail timeline, all you see is pure, unadulterated panic over the spot price, hovering in the low $1.40 range. The crowd is screaming that the asset is dead, completely blinded by the red candles. Let me pull back the curtain and show you the actual reaction that Ripple just triggered. Our advanced market scanners have just recorded one of the most violent psychological shakeouts in modern crypto history. We just witnessed a staggering $1.93 billion in realized losses hitting the ledger in a single week. Retail investors, exhausted by the engineered volatility, finally broke down and sold their physical tokens at a massive loss. This is the ultimate capitulation signature, but here is the terrifyingly bullish truth. The last time we saw a retail slaughter of this exact magnitude, the algorithmic price of XRP erupted by over 114% in the following months. Ripple did not trigger a crash. They triggered a highly coordinated wealth transfer. While retail traders are throwing in the towel, the underlying network utility is exploding at a rate we have never seen before. Daily successful transactions on the XRP ledger have violently spiked by 40%, nearing 2.5 million per day. Do you understand the massive divergence here? The actual usage of the network is going absolutely parabolic, while the paper price is being artificially suffocated to trigger your stop-loss orders. You are being manipulated into handing over the most valuable digital real estate in the financial sector for absolute pennies. If you surrender your position at these manipulated levels, you are funding the retirement accounts of Wall Street executives. The reaction is real, the shakeout is brutal, and the smart money is absorbing every single dropped coin. Do not become a victim of this engineered panic. Hold the line. Let us pivot away from the retail noise and focus on the massive institutional catalysts that are actually driving this network reaction. While the average trader is sweating over a 5-cent price drop, the global legacy banking system has officially colonized the XRP ledger. Just days ago, Société Générale, which is France's third largest banking institution, boasting over $1.8 trillion in total assets under management, officially launched its fully compliant Euro stablecoin directly on the Ripple infrastructure. I need you to completely grasp the sheer magnitude of this development. This is not a meaningless test pilot or a superficial partnership announcement. This is a systemically important European financial titan hardwiring its digital asset issuance into the XRPL. Société Générale is actively utilizing Ripple custody to secure their multi-billion-dollar reserves. When a $1.8 trillion banking conglomerate deploys its compliant fiat token onto this network, it acts as a massive blinding beacon to every other institutional player on the planet. The retail market is hopelessly distracted by the short-term price action, completely oblivious to the fact that Wall Street and European central banks are laying down permanent settlement tracks right beneath their feet. The integration of this Euro stablecoin transforms the ledger from a speculative retail network into a deeply liquid enterprise-grade foreign exchange settlement engine. Furthermore, we are tracking a critical supply shock actively forming on the major centralized exchanges. Over the last 2 weeks alone, market scanners verified that exactly 200 million XRP tokens were aggressively withdrawn from Binance and routed directly into unknown, highly secure multi-signature cold storage wallets. A withdrawal of this extreme velocity and magnitude mathematically guarantees that the available float on public order books is rapidly collapsing. The institutional whales are vacuuming up the retail panic selling and instantly removing those assets from the active trading pools. They are engineering a severe liquidity vacuum right under your nose. When you synthesize the massive Société Générale integration with the 200 million token exodus from Binance, the reality becomes completely undeniable. The smart money is not day trading this asset, they are aggressively hoarding it. They know that when the massive utility volume fully kicks in, the circulating supply will tighten drastically, forcing the price to explode upwards. We must now turn our attention to the Eastern Hemisphere because the massive developments emanating out of Japan are triggering structural shockwaves across the entire global ledger. sector. Recently, a monumental financial integration protocol was deployed by SBI Holdings. Japan's most powerful and influential financial group has officially launched a 10 billion yen blockchain-based corporate bond specifically designed to reward retail investors with physical XRP. This is a massive, highly calculated strategic maneuver that retail analysts are catastrophically ignoring. The bonds are completely managed on-chain, bypassing the archaic legacy securities settlement systems entirely. But here is the critical data point. To qualify for these lucrative digital asset rewards, Japanese investors are strictly mandated to subscribe through SBI's cryptocurrency trading platform, instantly onboarding massive amounts of fresh, sticky capital directly into the Ripple ecosystem. This is the ultimate enterprise Trojan horse. A legacy banking giant is utilizing a highly regulated traditional fixed income product to aggressively funnel new retail users and institutional liquidity straight into the network's architecture. This is merely the tip of the spear for the real-world asset tokenization sector. As we navigate through early 2026, the verifiable on-chain presence of tokenized assets on the XRPL is aggressively breaking all previous historical thresholds. We are tracking global investment giants actively developing advanced trading and lending infrastructure around tokenized money market funds natively issued on this network. The protocol operates strictly as a frictionless digital toll road. In order to mint these tokenized treasury assets, transfer them between institutional vaults, or utilize them in automated market maker pools, legacy institutions are mathematically mandated by the base protocol to consume XRP as transactional gas. As Ripple successfully onboards international banking conglomerates like SBI and Societe Generale into this ecosystem, the baseline transaction volume goes absolutely parabolic. This creates an unstoppable, automated, non-speculative demand vector for the native token. We are relying on immutable code executing millions of financial contracts per second, completely independent of retail sentiment or social media hype. The circulating supply is becoming demonstrably scarcer every single day, while the network's underlying structural utility is expanding exponentially. You are not holding a speculative meme token, you hold the vital bandwidth of the future financial system. Let us finalize this market analysis by establishing a concrete data-driven execution protocol for your portfolio, because operating without a rigid plan in this environment is financial suicide. We have empirically verified the severe algorithmic price suppression at the $1.40 level, the staggering $1.93 billion retail capitulation spike, the 200 million token Binance exodus, and the fundamental utility generated by global titans like Societe Generale and SBI Holdings. What does the advanced predictive analytics modeling project for the future valuation of this digital asset? Major institutional quantitative models, specifically those recently updated by elite financial institutions like Standard Chartered Bank, have calculated a macro-adjusted base target of $8 for the end of the 2026 fiscal year. Retail investors erroneously view the current suppressed price action as a catastrophic failure, completely failing to process the macroeconomic variables and the mathematical inevitability of the impending utility volume. A mathematical jump from the current suppression zone to even the absolute lowest boundary of that projection represents a geometric return on capital that completely eclipses anything available in traditional equity markets. You must strictly execute a disciplined exit strategy based on these statistical probabilities, removing all human emotion from the equation entirely. I utilize a rigid automated strategy called the Thirds Protocol. When the network price officially reclaims the historical all-time high parameter of $3.84, I will automatically liquidate exactly 1/3 of my holdings. This executes a full recovery of the initial capital deployment and secures an undeniable mathematical profit, eliminating all portfolio risk. The secondary tranche is programmed to ride toward the $8 institutional target zone. This is the primary wealth generation vector meant to permanently alter your financial trajectory. The final tertiary portion is locked securely in cold storage for the long-term macro play, anticipating XRP's ultimate integration as the undisputed global settlement layer. You must absolutely secure your private cryptographic keys offline immediately. As the network value increases, cyber threat vectors will multiply exponentially. We are currently tracking a massive surge in sophisticated phishing campaigns designed to completely drain vulnerable retail wallets. Upgrade your security infrastructure right now. The global market has been fundamentally rocked by Ripple's strategic deployment, and the raw ledger data clearly proves that the accumulation accumulation phase is nearing its absolute mathematical conclusion. Ignore the manipulated graphical charts, execute your strategy flawlessly, and I will see you at the absolute top of this cryptographic cycle.